The crypto market has come down substantially. We've seen double-digit losses. The key question, what caused this? What can you do about it? What do you need to look at? And what comes next? I'll examine all of those things in this video. Let's run the numbers. Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. A lot of people don't realize that if they don't look at the cheat sheet, they can be subjected to massive drawdowns. The answers to why Bitcoin actually sold off are inside the cheat sheet, and at CTKSmethod.org you can pick it up absolutely free of charge, and there are a number of videos here that will help you out in understanding it. The cheat sheet is comprised of 7 rows, and all of these tickers, which are available as a watch list, are in the description of this video. What actually happened in the past 24 hours? We saw the VIX spike up. When the VIX spikes up, that's not a good thing, and we saw US dollar currency strength. One of the things that we also saw is the S&P 500 coming into structural resistance twice, rejecting it, and Bitcoin followed suit. And you can see here that the crypto market was exceptionally hit. I'll prove out these intercorrelations and interconnections. Also, commodities did quite well. And the memes, unfortunately, were hit hard. Looking into row 1 of the cheat sheet, the cause of the sell-off inside the crypto market was undoubtedly the increase in the volatility index of the S&P 500. The VIX. I've been noting that the VIX has been basing, and I said you might need to be a little bit careful because if the VIX starts to spike up, we would expect Bitcoin and of course the entirety of crypto to sell down. Unfortunately, that is what happened. Just zooming out here a little bit, you can see since the US presidential election, the VIX has been coming down and down and down. I mentioned it was basing and it could turn around, and that's unfortunately what it did. Is the VIX turnaround over? I doubt it. We could get a normalization right up to here, right around to the 15 level without too much of a drama. To know where the VIX is going to stop, we need to actually look deeper into the cheat sheet. Unfortunately, a lot of people don't realize that all markets are intercorrelated and interconnected. If we invert the Bitcoin chart, you can see the VIX and Bitcoin are moving directionally together. This is normal. Right across social media, there will be plenty of people saying, who the heck sold Bitcoin, and destroying their computer equipment and doing all sorts of things. And there will be a lot of people saying, buy the dip, buy the dip, buy the dip. And in a few days' time, probably a lot of people saying, I bought the dip and it keeps on dipping. You'll see all the memes come out. You need to be a little bit more sophisticated than just looking at X/Twitter or the mainstream media press for your news on what to do, when to buy, and when to sell. What you need basically to do is to look at the intercorrelation and interconnection between charts. If you do the cheat sheet each day, you already know that this was coming. In the past 24 hours, we had some other news. And that news sent gold just screaming up, silver screaming up, and copper screaming up as well. The news stories were very different. Gold measures geopolitical risk. President-elect Trump said, yeah, we don't need to be part of NATO. We might actually drop out of that. And inside China, they had a very interesting concept of getting more stimulus into the market. The impact was substantial. You can see the S&P 500 futures and Bitcoin. It's selling down and it's literally overlaying itself. The Dow, the Nasdaq. A lot of people say that you can't understand why crypto would be coming down. I would argue that those people are not looking correctly at the charts. There is always a reason, and the reason is always in the charts. What happened here with China's economy? Basically, the excess of stimulus that the PBOC is going to unleash on the economy of China is pushing up metals, and it did wonders to Forex pairs. But just bear this in mind, no stock market can escape the US's gravity, and you can see how Bitcoin is a very good indicator as to where the stock market could be going, no matter what country you're in. Again, these are intercorrelations and interrelationships that we talk about each and every day. And they're a core part of the CTKS method, which is basically a process. When the China news came out, the euro and the Aussie dollar, the Kiwi, the cable, they all went absolutely nuts. And then we had the spike in the VIX and they all got crushed. All charts are intercorrelated and interconnected. And if you're actually just doing Forex, looking across the cheat sheet will give you an incredible insight. Looking at row 3 of the cheat sheet, which is about the major indices, the S&P 500, the Nasdaq, the Dow and the Russell, what you see here is the S&P 500 was rallying. Somehow it got stopped out. Imagine if we could predict where this would happen, because as this is occurring, the VIX is falling, but as this is occurring, in other words, the S&P 500 is coming down. Guess what the VIX is doing? You got it, it's going up. Let's have a look into the structural levels of the S&P 500. When we look at the S&P 500, you can see it's in one hell of an uptrend, and this uptrend has been going on for quite some time. This is on the daily basis. You can also see here that we're actually trading above all-time new highs, except of course for what happened in the past 24 hours. A lot of people will tell you as soon as you get above a level of structure that previously didn't exist, it's called price discovery, and there's just clean air. There is absolutely no resistance above that. That is a retail myth, and it will get you crushed. And I'll explain how you can get around that problem. We're just going to zoom in to that price discovery area. Technically, there's not supposed to be any resistance, but you'll see that's actually false. Let's turn on the indicator from the service, and you can see very plainly that at 6,088, there's a very substantial area of structural overhead resistance, and there's a couple of lighter ones just playing around there as well. We had a positive CTKS gap, which meant that we could move up very, very quickly, but that particular resistance was a huge problem. And combined with the VIX basing around and then spiking, everything came down, including Bitcoin. I'll just give you an idea of what happened inside Bitcoin's price structure. Bitcoin is the blue line. As the S&P 500 was breaking out, Bitcoin took a little bit of time to get magnetized in that direction, but all charts are intercorrelated and interconnected. The first time that we hit structural resistance on the S&P 500, that put weakness inside Bitcoin. We hit it again, and then we started to come down. And you can see that Bitcoin and the S&P 500 are moving in directional alignment. This is normal. It means something very specific. Inside the crypto market, people only look at crypto. They absolutely ignore the main markets, they ignore Forex, they ignore commodities, they ignore government bonds and yields. They do so to their disadvantage. That's why I created the cheat sheet, to give you an edge. Unfortunately, this is not the only problem the crypto market had. When looking at row 5, which is literally the crypto market, total crypto market cap, Bitcoin and Ethereum, I've also included crypto total market cap excluding Bitcoin and ETH, excluding Bitcoin and USDT dominance. As traders, we need to get rapid signals. These are structurally not marked up, but they give you a directional correlation. We need to look especially inside crypto total market cap, because this was the problem inside the crypto market in the past 24 hours. The CTKS method is the world's most powerful smart money buy and sell level detection system. It tells us when there are potential problems inside the market, and when we use the cheat sheet, we can use that to stack probabilities and understand what's going on inside a chart. Otherwise, you need to rely on a lot of different statistical measures. And as a former lecturer in first and second year statistics, a lot of statistical measures will not help you in finance. That may sound bizarre, but it's actually pretty true. Okay, let's look into the structure of total crypto market cap. Statistical indicators are always a good thing. I'm not saying don't use them, I'm just saying be aware. They suffer enormous problems, especially inside the crypto market. It goes a little bit like this. Hey, guess what? Your average temperature if your left arm is in the freezer and your right arm is in the fire. That balances out, but it leaves you without both arms. Welcome to statistical measures such as EMAs and SMAs. The problem with the crypto market is it is subject to exponential change. Now you can see all of this overhead structural resistance around that 3.62 trillion. This was right across the entirety of the crypto market. We challenged it once, we died. We challenged it again, we kind of consolidated because we went into the weekend. We challenged it again and died. This is the power of the SLs, or the Stanfield levels, or CTKS levels within the CTKS method. It is called the world's most powerful smart money buy and sell level detection system for a reason, and you can learn it yourself to mark up all your own charts. We had a bit of a confluence of probabilities that caused downside negative reactions inside the crypto market. The first thing was the S&P 500 came into its own structural resistance after going through a positive CTKS gap. Those positive CTKS gaps can turn into negative ones, and that spiked the VIX. I would love to give you the Cliff Notes version of all of this, but you really need to understand it. We can see that on total crypto market cap, we've had structural failures, and now this level around that $3.41 trillion mark, or just around here, when you're looking at your own charts, you can compare your money chart, which is just the chart you put money into, back to total crypto market cap by looking for these kind of fingerprints. We're under extreme sell pressure at the current time, and this is not something that you should take lightly. When we start to repair from sell pressure, that's a good thing, and that means that you may get wavy action like this, but a lot of people keep on buying the dip, and it keeps on dipping, and they have no clue why. It is all about structure, specifically structural failures and structural passes. Turning our attention towards Bitcoin, let's look at some of the levels that you need to be aware of. You can see all of this overhead structural resistance around that 104,000 mark. That is really important. Also, you can see structural overhead resistance around that 102. You can see that we're just starting to get above this 147 level of one structural resistance, and Bitcoin is seeking to confirm that as support. We've had an intermediate cutover on a couple of different bases, but we're under extreme negative momentum. This is something that you must bear in mind. If we start to see structural failures and these levels do not hold as support, we are going to the next level down. If that doesn't hold as support, we're going to the next levels down. So please bear this in mind. It's really important. Hopefully, this has given you some insight into what caused the problems inside the crypto market. All charts are intercorrelated and interconnected. If you're looking at Bitcoin's chart and you're thinking, hey, I can tell where Bitcoin is going just by looking at Bitcoin's chart, sorry, that is just not ever been the case institutionally. You need to stack probabilities, and you cannot stack probabilities if you only have one chart. The more charts that you look at, the better your stacking of probabilities will be. The best thing that you can do is just download the free cheat sheet and start to look at it, start to understand how it works and how you can use it to safeguard your wealth. It will give you an incredible insight into the markets. Now, what do you need to look at? I would suggest that you keep your eye on the S&P 500 futures primarily. Also look at the Nasdaq, the Dow, and the Russell. If we've got continued negative sell-side momentum, you know what's likely to happen. Bitcoin is likely to follow it. Unfortunately, many people think that it must be a one-to-one relationship. That basically means if the S&P 500 is coming down, Bitcoin must also be coming down exactly at the same time. Financial markets are really complex. They don't work simplistically. If the futures are coming down, that just suggests that Bitcoin and crypto will continue to come down as well. Fortunately, total crypto market cap is holding up well at the current time. But you can see we're getting into some negative CTKS gaps, so if we get a follow through in negative price momentum in the major indices, we could come down relatively hard. If that's the case, we are likely to move down in terms of Bitcoin. Keep your eye on these structural levels. These structural levels are incredibly important, and we start to get stronger structure around the 92,738 mark and just a little bit lower around the 90,600 level. A lot of investors say that they dollar cost average. This is the time to DCA. If you really believe in what you're doing, this is the ultimate DCA strategy, to just lean in at structural levels, especially strong ones. Rule 138, every single investor becomes a trader each time and every time they buy or sell. Therefore, it's important to buy well and to sell well. Investors have the superpower of holding on through anything. They have diamond hands. Traders are very different. They're experts in timing. In other words, they seek to buy when prices pretty much bottomed out, and they seek to sell when price is coming into a mass of structural overhead resistance. In other words, traders know structure. Unfortunately, a lot of people get caught up on the definition they give themselves. If you're buying and selling, you're an investor and you're a trader, so don't worry about labeling yourself for taxation purposes. The most major tax that you will ever pay is through your losses, and loss tax occurs each time and every time you don't understand structure, intercorrelation, or interconnection. So they're very important to get rid of those taxes. Don't worry about government taxes on profits. It may or may not occur, but when you invest or you trade, the taxes on your losses, they always occur. So the key is to minimize them. And becoming a trader, or at least learning how to trade, is a huge, huge part of that. My goal is to help you to become more of a financial and emotional blessing to yourself and those you love. To do that, inside financial markets, you need a lot of knowledge. So the Profiting from CTKS Method Structure course, which is coming out later on this month, you can get it absolutely free, and it's worth a fortune. But if you go to ctksmethod.org and you register, and certain conditions do apply. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. And keep positive, family. Losses are never personal, and they are not ever permanent. Bye for now.